Looking at what might be on sale on that list, and within that list, there's over 100 that are down more than 50% from their 12-month high. Well, there must be some names that are on your shopping list. Ones that were too expensive, or you've been watching them come down. People on the halftime report talk about Cleveland Cliffs. That's a value stock, and it's really been smoked recently. Then there are some of these high flyers, Cloudflare, Snowflake, CrowdStrike. I mean, you name it. I mean, PayPal, which is a stock I know we'll talk about, is probably down 60% over that period. Peloton, I mean, it's a long list, and you can look over the financials and think through about what that long-term for the company might imply, even if it's a takeover, and just buy some because, you know, there are many names that have great potential and earnings, but were just too expensive.
Well, PayPal is, however expensive it was last night, it is 17% less expensive today, I assume, because the stock is down 17% right now. Not piling on. You made a lot of great calls. PayPal has burned a lot of people over the last year or so. What's wrong with the company? What would you like to see them do? And hey, if people liked the stock 30% ago, maybe people love it now.
Well, I think that's right. You know, they may be in the penalty box for a quarter or two because they've taken down guidance. Apparently, they had a lot of new subs. You know, people use PayPal for everything now, and Venmo, phenomenal platforms. But many of those new customers were low quality. You know, they just came on for the promotions. And that means that the guidance for this year is much lower than expected, hardly any growth. Next year, they begin 20% plus growth in earnings. So if you can look forward for a few quarters, you can see that steady resumption of quality subscribers to PayPal. And, you know, realize that every time you make a purchase on PayPal, which is very easy, they take a cut from the merchant. And that's just a great subscription business that's just become, you know, embedded. It started, you know, in the pandemic, more and more people were driven to it because they were at home.
It's everywhere. And that's why it's hard to understand what's wrong with the stock when literally everything you buy, you've got the option for PayPal, and it works great. I'm not promoting the company. I use it all the time because it feels secure. Let's move on. I know we talk a lot about tech. Google, by the way, amazing day. You're going to print a lot of money on Alphabet. Others will talk about that. Talk to me about Cleveland Cliffs, Carrie, because wasn't this one of like Lebenthal or Stephen Weiss's favorite? I mean, we're talking about iron ore and mining. Cleveland Cliffs.
Yeah. Well, it's not the sort of name we would own. But if you think about the value,
I was like, wait a minute. Are you sure these aren't like Lebenthal's old notes? I was like, Carrie says Cleveland Cliffs.
I'm helping you, Jimmy. Helping you. Well, I saw it on the list, and I couldn't believe it. So if you think about the value trade and reopening stocks have been so strong, this one has been very weak. And, you know, I think it just got ahead of itself. It sells for a low multiple relative to the market. And, you know, if you're looking for a bargain and you like that sort of name, I mean, why not, you know, take a bite? You know, and he's the authority. But I looked at it and said, wow, there are so many stocks that have come down tremendously. Let's put that on the list. But Google, you know, I mentioned that because think about it. It had $75 billion of revenues in the quarter. Procter & Gamble, huge Procter & Gamble, does $80 billion a year. So that's just really fantastic numbers for that company. Yeah.